Hello, this is MrChris. ULTY is paying out nearly 10 cents a share every single week, which at today's price is over 70% annualized yield. And that is massive. But here's the question. ULTY just dipped below $6 and we're heading into September. September, which is historically the worst month for the stock market. So is this the time to dump ULTY? Or should you actually be buying more? Let's break it down. But first, a disclaimer. Hello, this is MrChris, and I used to be an engineer and a project manager for an oil and gas company. Last year, I was forced to retire, so I started trading options using the no-loss method of the wheel strategy and investing in high dividend funds from yieldmax. I am not a financial advisor, and all content of my channel, including this video, are for educational, information, and entertainment purposes only. Please conduct your own research and proper due diligence before investing. And if you like this video or any video in my channel, please punch that like button, comment, and subscribe. I would like to hear from you on how you generate your retirement income. Okay, let's go. First, let us quickly talk about what ULTY actually is. Of course, we all know that ULTY is a yieldmax ETF, but unlike some of the other yieldmax funds that use synthetic options contracts, ULTY actually owns the underlying stocks. And the fund managers sell covered calls and option spreads on about 25 different stocks or ETFs with high implied volatility. And that option income is what funds the weekly distributions. For the past 3 to 4 months, ULTY's price has stayed close to $6 per share. And during that same time, it's been paying out about 10 cents per share every single week. That means if you own 1,000 shares of ULTY, you have been collecting around $100 per week. And at today's price of $5.75, that's an annualized yield of more than 70%. Now, just this week, ULTY slipped from $6 to around $5.75 per share. But I think today it has moved close to $5.80 per share. Not a big move, but it raises the question, what happens next? And the timing is quite interesting because next week starts September. And if you have been in the market for a while, you probably know the term the September effect. Historically, September is the weakest month for stocks. Over decades of market data, September on average shows the lowest returns compared to all other months. So if history repeats, the market could pull back in September, and since ULTY owns stocks and writes options on them, a broader sell-off could pull ULTY's share price even lower. But here's the twist. When markets get choppy, implied volatility usually goes up, and that means higher option premiums, which could actually increase the weekly payouts from ULTY. So even if the price dips, the dividends might get better. So what should we do? What should investors do? Now let's take a look at both sides. Dump or take profits. If you're worried about net asset value erosion, meaning ULTY slowly drifts from $6 down toward $5 or even lower, then locking in gains now protects your capital. This approach makes sense if you prioritize capital preservation over income. Now the other option is to hold for income. If you're in ULTY mainly for the weekly cash flow, the dip doesn't really change anything. At $5.75 or $5.75 per share, the yield is even higher than before. For income-focused investors, price swings are less important than the steady flow of dividends. And the third option is buy more or average down. And these are for aggressive income investors. A dip like this can actually be a buying opportunity. Adding more shares now increases your weekly payouts and locks in a higher yield at this lower entry price. Of course, that comes with the risk of more downside in the stock price if September brings bigger market conditions. So here's my personal take. With ULTY, you really have to decide whether you care more about steady income or protecting your capital. ULTY is not built for price growth. It is built to maximize option income. That means the share price can drift lower over time, but the income stream stays strong, and sometimes even grows during volatile markets. Although recently the price of ULTY and its dividend distribution had been stable till last week when we had a flash crash, and that brought the price of ULTY down to $4.59 before it settled back up close to $5.75. A repeat of what happened last week can occur again in September. So are you for steady income or for protecting your capital? In my case, I prioritize my income, but I'm also concerned about protecting my capital. So personally, my action will be to hold on to ULTY to generate more income and generate cash in order to buy more if any buying opportunity occurs. In fact, I recently stopped my drip on ULTY. Instead of automatically reinvesting the dividends, I am now letting them build up as cash. Why? Because if September does bring more downside, I will have the extra cash on hand to buy more shares at a lower price. That way, I am not just sitting through the September effect. I'm actually preparing to take advantage of it if it comes. So going into September, I'm looking at ULTY less as a growth play and more as an income engine. My goal is to collect weekly dividends for my retirement income, and I am not dumping. I will actually buy more to further lower my actual cost per share. The more shares I have, the higher the weekly dividend, and the lower cost leads to less net asset value erosion. So that's my perspective. The key question for you is, do you want the cash flow or do you want price stability? Because with ULTY, you usually cannot have both. That's it. If you like this video or any of the videos in my channel, please hit the like button and subscribe, and join me in my journey in generating my retirement income through trading options and investing in high-yield funds like yieldmax. If you have any comment or question about the no-loss method of the wheel strategy or my perspective about yieldmax, please write a comment and I will answer them the best I can. This is Mr. Chris. Thank you, and I will see you in my next video.